Certainly, we'll talk about the parks outlook and the mask mandate story. But just in general, first impressions of the quarter, obviously well received. A lot of reassurance about the Disney Plus streaming sub ads. What stood out to you?
Good morning, Mike. Thanks for having me on. Clearly, the key issues were, one, the streaming sub ads were a little bit better than expected. And the company also beat on revenue and profits. Hulu profits were stronger than expected. Obviously, the domestic theme parks turning profitable, even just slightly profitable in the quarter, is a huge milestone in COVID. And then the linear networks are declining a little bit more rapidly than people had anticipated.
All right. And, I know you have, based on your, look for 2022, that the parks business will get above 2019 revenue level. So, I mean, it's essentially a normalization presumed right now. There's anything going on right now lead you to question that at all, or does it seem like it's on course?
Sure, Mike. Actually, if we look through the numbers, it looks like domestically, by our calculation, domestic parks did about 2/3 of business that they did in the June 2019 quarter, which to me is pretty good. Obviously, we're concerned what the impact of the Delta variant is going to be. They have gone to mask wearing indoors, but remember, it is mostly an outdoor experience. The advanced booking seems strong. I realize those can change at a moment's notice, but it looks like the parks, both for Disney and Universal, your parent company, both seem to be doing quite well domestically.
And Al, just how are you thinking about the valuation of the company as it stands right now? It's one thing to keep coming back to. They had this huge step function boost in the valuation related to Disney Plus. You had the Fox assets, and then, of course, considered to be a winner of the pandemic with streaming. And at this point, still you're saying $220 a share is your price target. It's 10% above the all-time high. How do you kind of get to that based on the fundamentals?
Sure. I mean, Disney is going through a major business change. Therefore, you cannot value it the way we used to in the past. We use a bifurcated valuation. You've got to look at DCFs or comps to look at Disney Plus. We look at 2024 estimated subs, give it about $700, $750 a sub on Disney Plus. It also matches our DCF there. And then on the core business, which does about $6 of earnings, we put about a 19 multiple, which is a blend of a higher multiple for the parks and studio and a lower multiple for the declining linear network.